Hello, welcome back to my channel. Today I'm going to be taking a quick look at FHA loans. We have to see what in the world is an FHA loan. So please, before I begin, please consider liking and subscribing, and let's get right into it. So an FHA loan is basically a federal housing and administration loan. It is a government-backed loan. So think of it as the government is like the insurance. It's like an insurance that it's gonna step in case of anything. So it's gonna help you get a loan with the mortgage lender. The FHA, it's not the one giving you the mortgage. They're just like an assurance, like, okay, in case of anything, we're gonna be responsible. So it helps you get the loan from the mortgage lender. There are many mortgage lenders in America, like for example Rocket Mortgage and others. Those are the lenders that they're the ones who are gonna give you the actual money to get to buy the house. Now FHA starts back in during the days of the Great Depression, like in 1934, and the main advantage of FHA is if you have a lower credit score, it can be ideal for you, and it does have low down payment. You can go as low as 3.5%. This you can find this information on hard.gov on the actual website. And I looked also on another article on NerdWallet. So the key takeaway is you can have a low down payment as low as 3.5% and of the purchase price, and with a 580 FICO score. At the time of recording, the FICO score requirement changes many times. Or you can put a down payment of 10% with a 500 FICO score. Between 500 and 579, you can put up to 10% down payment. Of course, that's going to impact your pricing when you are locking the loan. But the key takeaway is FHA, you can go down payment as low as 3.5%. The FICO score is low requirement, and that's why it's a good deal. The problem with FHA is you will have to have homeowners insurance throughout the term of the loan. So if it is 30-year loan or 15-year loan, you're gonna have to have homeowners insurance throughout the term of the loan. Now I'm going to look at other types of mortgages like conventional, VHA, no, VHA, conventional, VA, USDA. Those are, I call them like government loans because they are backed by the government. And we're going to look at them in other videos. So I saw some of the pros and cons. This is an article from Investopedia on FHA. Some of the pros are, like we mentioned before, it's lower credit scores. So like 580 FICO score, you can get the loan. Lower down payment up to 3.5%. It's federally backed, like I said. So that will help you when you go to a lender. They will more likely approve you if you have you are backed by the government, really. So some of the cons are MIP paid both upfront and monthly. Yes, you have to pay. You can't finance the MIP, that's mortgage insurance. It's financed in upfront, and then you have to pay it monthly. That's the homeowner's insurance. So that we call it in escrow. So you can escrow different types of months. Like it depends on you. You can do 3 months, 12 months on the escrows, but you cannot waive the escrows. I don't know if I'm confusing now, but well, just think of it that MIP is very important. That's the mortgage insurance. It's important in FHA. You're going to have to keep it throughout the term of the loan. It cannot be used for second homes or investment properties. This is only for primary residence where you're gonna live. You're not gonna buy a house using FHA loan and then that's gonna be an investment property. No, you might most likely need a conventional loan for that if you are buying a second home or investment property. We're going to look at conventional loans in another video. You will have higher interest rates. That's one of the cons of FHA loan. The interest rates are going to be higher because FICO scores also are going to be lower. So that's more risky to lend to someone based on your credit score. If somebody had like a perfect score, very high score, 700 plus, their interest rates most of the times can be lower than somebody with 580 score or less. So you will get higher interest rates with FHA, but you can later on, if you do like a refinance, there are different types of FHA that you can do. You can do like a rate and term refinance. That one you can do it to lower your interest rates. You can do it also to lower the term of the loan. Maybe when you got the loan it was 30 years, you want to lower it to 15 years. You can do a rate and term refinance. And there are different types. There is renovation FHA that we call 203K, and there are different types. So FHA is quite a lot. What you need to also know is there's gonna be a county limit with FHA loan. So what does that mean? That means that you cannot just go borrow $1 million using FHA. It depends on the county. If you lived in some exception areas like Alaska or California where the housing costs are ridiculously high, then the county limit is going to be higher. But if you're living in somewhere, I don't know, in South Carolina, the county limit is going to be lower than compared to living in Hawaii. So you have to keep in mind of the county limit. It's going to restrict the amount you can borrow. So there are pros and cons with FHA, and there are different types. There are refinance, there's the 203Ks, renovation loans, and you can use a tool actually to see. There are many FHA calculators that you can use to see what your monthly payment might be. So like in this case, the 203K that I was mentioning is a mortgage program where you get extra funds to cover repairs in your property. It's available for both purchase. Maybe you're buying a home and it needs repairs, and it's also available on refinance. However, with FHA, you're gonna need to do appraisal. Appraisal is required. It's like required, except on an FHA called Streamline. That's your broker or whoever you're buying the home from will most likely whoever is assisting you to get the home will explain to you the different types, like what the FHA Streamline is, and in that case you can waive appraisal, but for the others you need appraisal for sure. Appraisal has to be done on the property. Now let's look at the calculator just for 1 minute to see what it might cost you. Now this calculator, I got it from the usbank.com. If you just Google FHA calculator, you're gonna get different tools that can give you a rough estimate how much your monthly payment is gonna be. So in this case, I used this calculator and we put the purchase price of the property at $360,000. Now purchase price is what you're gonna pay. I mean, that's what the property they are gonna be selling it at. It's different from the appraisal value. It might be worth more, but they're asking for this, or it might be worth, it's different. Purchase price and appraisal value is different. So in this case, we're gonna use purchase price. The down payment, I put down payment at 3.5% because that's what I wanted to use for FHA, 3.5 down. And interest rates, they put it at 4.75. Might raise it, I don't know, let's put it at 5.1%. And property taxes, you're gonna have to pay property taxes. Homeowners insurance, that's like mandatory on FHA. And you're gonna select the rate term. I mean the term or the length of the loan. It's gonna be 30 years or 15 years fixed. So in this case, it adjusts it to, that's quite a lot for a monthly payment. So this is what you might approximately be paying in a house in a month, a $360,000 house. I don't know the area yet because this is just a random calculator, but it tells you exactly what you're gonna be, the breakdown of it, like the total loan amount and everything. Now, what you need to really pay attention to is that these calculators, they don't take into account the closing cost. When you're buying a house, there are many costs that are not all going to be financed. You're not just going to be bringing 3.5% and that's it, like 3.5% of 360,000 and that's it if you're buying a house. No, you will have to also consider the closing cost. That can be the broker fees, the cost of appraisal, the credit report, and all these other title fees, and they add up, and not everything is financed. So in a house like 360,000, you might end up bringing up, they require you to pay, I don't know, 10,000 or 11,000 in closing costs. So it varies. It's based on a lot of things, but you'll have to go and talk to your broker or to the lender and see exactly how much is gonna be the process of buying a house. Now, FHA is good for like new homeowners. There are several different types. It was just a quick look to see what FHA is, and I looked at a couple of those articles, and you can dive in deeper, do your own research. This is just a very light review of looking at what FHA really is. And so if you like this video, please like and subscribe, and I will see you on the next one.